The small businesses, even if they're not startup and they've been around for a really long time and have been a long-term company within a family, they have a lot of unique challenges. And so all of those challenges are something that I've really enjoyed solving while I work in a
Yeah.
financial leadership space there.
Everyone, thank you so much for joining the Behind Company Lines podcast. Today we have Brandy Burch, CEO at benefitbay. benefitbay is a platform for brokers, employers, and employees that enables quick and simple ICHRA deployment for companies of all sizes. And we're going to get into what that is. Brandy, I'm so excited to have you on the show, not only because of your background, your experience, but this whole kind of movement for ICHRA. And obviously we'll go into what that is, but it's exciting to see companies and employers transitioning the benefits that they give individuals and really seeing the shift in things that are actually usable for people in their day-to-day lives. So before we get into all that good stuff, what were you doing before you became the CEO of benefitbay?
Well, Julian, first of all, thank you for having me. Before I became the CEO of benefitbay, I've been in financial leadership in a lot of S&B organizations, varying from manufacturing, construction, financial services, and technology. Found myself in a technology startup before benefitbay that was in the insurance space, and that really led me to the founding position at benefitbay.
It's incredible to think about like the S&B kind of ecosystem and that relationship with customers. How I guess specialized is kind of working within the segment, being that it's like semi-personal, there's some organization, but it's kind of super unique.
Yeah. Really the small businesses, they're even if they're not startup and they've been around for a really long time and have been a long-term company within a family, they have a lot of unique challenges because they don't have the funding or the capital or all of the things to be able, all of the team members they need to survive seasonal growth. And so all of those challenges are something that I've really enjoyed solving while I work in a
Yeah.
financial leadership space there. And so that's what kind of transitioned a lot of that background over to benefitbay.
Yeah. And in regards to financial leadership, what in particular were you doing for companies? And do you feel like it kind of gave you the insight into how you could help people with benefitbay and what you're working on?
Yeah, I often took roles in organizations that had been around a minute, but they were in that transitional stage where they needed to handle a lot of transformational change. They needed to grow beyond what they were comfortable with, or the market started to adapt and change, and they needed to do that as well. So that had been for my career, my MO is go in and help companies
Yeah.
transition, become scalable, take that next step from small to mid-sized business.
Yeah.
And so from my career, it's all been around how do you maximize the people? How do you maximize the capital to build a bigger
Yeah.
business from a business that was existing? So this is the first time I've been able to build something from the ground rather than come in and do transformational change.
And with that existing business, without injecting some sort of capital, because I feel like that's what a lot of people expect, at least within the fast startup and software space, which is like, okay, if I need to get to the next stage, I just fundraise and inject some capital, and then I am that company. How do you do that without having that access or wanting to just do it organically? What's necessary? What's needed?
Yeah, well, often as a financial leader, you come into an organization, you evaluate what that's going to look like. So in an organization that's already established, you traditionally already have those revenue metrics. You already have the margins. You already have those things that are needed to go and get a bank loan. So you're looking at a different type of business that has operational history, data points, and things that finance people can utilize to go get that capital, non-dilutive capital. When you're looking at a startup, you're looking at how can you go get dilutive capital so that everyone can help you meet those objectives because a bank or a traditional avenue is not available to you. So that's kind of how it varies. And sometimes there are some decisions to be made. A lot of times in those smaller businesses that have been around a while, they're spending money on things that they shouldn't be spending money on, or there are unfortunate decisions that need to be made to move the business forward, or perhaps you have to close an operations because now you're moving to remote or whatever that may look like, or consolidate operations. So from a financial leadership position where you're coming in to make change or improve a business, there are a lot of different decisions. And one of those key decisions that I often looked at was how much are we spending on benefits and have they been taken to RFP in a while? What can we do to improve those? There's often a lot of spend to be found there. So that's one of the reasons why that experience also converts over to benefitbay.
How much of the benefits were either being underutilized or the company was just paying for benefits that maybe their employee didn't necessarily need, or segment of how much of that was just inefficient, I guess.
Yeah, inefficiency is key because it's really painful to change carriers. And when you're with a carrier for more than a year or two, they continue to raise your rates. And so
Yeah.
suddenly, as a small business, you're paying too much for your healthcare. However, to make the decision to go take it out to get a request for quote or pricing from other carriers, you can reduce your price, but then you disrupt your employee population.
Yeah.
So there's all of those decisions to be made as someone who's running a business. And often people don't want to disrupt the employees, so they won't make that decision. And suddenly they're paying 30 and 40 and 50% more than
Yeah.
they should be for healthcare.
Yeah. And how much do, say, like local business, like regulations for their employees actually impact that? And if it obviously it must be different from state to state. What's that different experience like?
Yeah, it is different from state to state. I mean, the cost is different from state to state. The availability of plans is different and carriers from state to state.
Yeah.
And so what we've seen is the key problem in today's workforce is the distributive teams, right? The
Yeah.
teams
Yeah.
are all over. And now with remote work, they can be anywhere and we can find talent anywhere. However, difficult to find one carrier that works for everyone, that has
Yeah.
coverage in the area where someone may live. So that's an additional challenge for small businesses, large businesses alike, is that we have diverse workforce and they are highly distributed now
Yeah.
between ages. Right? We have a lot of boomers, we have a lot of early 20s. And so the healthcare
Yeah.
needs of an early 20 or a boomer are two different things. And you're
Yeah.
trying to pick a plan or a set of plans that works for a giant population, and that doesn't work.
Yeah. And that's so interesting. How many providers are actually out there who are able to service companies, or do companies, are they resorting to multiple providers if they don't have a solution?
Yeah, so companies are typically picking one carrier, but they're picking a few plans. So they're saying,
Mhm.
let's have an HMO, let's have a PPO, and let's have an HSA. And then they're letting their employees pick between those three types of plans with one carrier. So they do
Yeah.
settle into a carrier because the way the group rating system works, you really can't have multiple carriers. And so
Yeah.
that creates a problem. And the ICHRA solves that for that, right? The new regulations that passed in 2020 allowing individual contributions for health reimbursement arrangements at an employer level for the employee gives a defined contribution, allows the employees to go spend that money at whichever carrier they prefer, as
Yeah.
long as it's an ACA plan.
That's fascinating also. And how does that come into play with people who are in different locations, who have different costs of living? Is it like a sliding scale in relation to income level? It seems like there is that next kind of challenge. Okay, we're not having one standard provider individually, but now I still have that same issue.
Right.
Yeah.
Those regulations are set for compliance by the government each year of what is an affordable plan. So those
Yeah.
employer businesses have to follow what is the rate per employee, or how much can their healthcare cost them? How much do they need to provide for that to be an affordable healthcare plan for them? So that's all set each year. That rate has changed a slight amount each year. And our technology helps facilitate taking in all that data on the employees and letting them know what that value has to be to remain compliant.
Yeah. And what's the feedback from the employee side? Are they very receptive to these ICHRAs? Are they less receptive because it's not traditional? What's kind of the feedback you're seeing?
What we're seeing is it's much like any type of large change. They want to make sure they're going to be able to receive the same quality of healthcare plan for the same or less dollars out of their pocket. And once they're able to enroll and select a plan that does meet those needs, they're excited. In often cases, they're saving money. They're saving significant money. Then they're seeing those savings to their personal family, and they're happy about being able to make that decision for themselves. They're also in different healthcare stages in their lives. So if they do not need to be overinsured, they can pick something that's maybe a little more conservative and less costly to them out of pocket. If they're at a stage where they're having children or they have other decisions to make, they can buy up those health insurance coverages at that time.
Yeah. And what types of programs are out there? What do you see commonly? Like, are people just still using them for regular healthcare and dental and those benefits? Or are we seeing newer, different types of programs being involved in a lot of these employees kind of, overall health, ecosystem, marketplace? I'm not sure how you define it.
So ICHRA in general is for the medical benefit. However, employers are now moving towards a defined contribution or a bucket of dollars to allow their employees to make all of those decisions. So what we're seeing from the ICHRA adoption in the United States is that it's heavy in the states that have individual favorable pricing. right? The individual rates and the plan offerings in those states are really competitive, and therefore the individuals are really happy with their employer letting them take the keys to that car and make those decisions. Now, in the United States, it's currently favorable in 24 of the 50 states, those rate tables. So we have a ways to go. When ICHRA passed, it was only 18 states. So we're making significant traction from 2020 to 2023. We've grown in adoption in the states, offering more favorable plans, offering more carrier options. However, in the Midwest, we could do better, and that's where I'm at. So in the Midwest, we don't have as much competitive advantage on the individual side, nor do we have as many offerings from carrier perspective for the employees to choose from. So what we're seeing for BenefitBay is heavy in the Northeast. We have a lot of clients in the Northeast. It's very favorable for those Northeast states. We're seeing states like Colorado, Florida. We're seeing Ohio, Pennsylvania, Minneapolis. However, right here in the core of the Midwest, we could do a little better.
Thinking about how does it changes the dynamic with healthcare providers and the plans. Are we seeing any changes from that initial movement to ICHRA style plans or benefit kind of buckets of stipends almost, if you will? Is there any change in that you're seeing now in providers and plans and things like that? Or is that kind of to come as people start having a little bit more agency to what they can choose?
Yeah. What we're seeing is when we first started, it was a lot of education and a lot of, well, we don't really think this is going to adopt. We don't really think people are going to do this. Or the group side of the carrier saying, we're going to maintain this business and it's not going to go over here to the individual side. What they're seeing is this is actually adopting, and employees and employers are asking for it, and that brokers within the ecosystem are offering it as a solve when it does solve complex cases for their clients. So in that regard, they're now listening, and we're having a much better opportunity where carriers are coming to us to say, what are you seeing? What are the types of industries that are adopting this? What types of employers? What's helping them make the decision? How do we get in here and make sure we win this business? This will be the first time an insurance carrier can actually have a consumer for life. When ICHRA continues to adopt, you and I can just decide, well, guess what? Blue Cross pays my claims. Other carrier does not. Or United Healthcare is not covering these types of things that are important to me. So I'm going to move over here and go to Humana, right? And so I'm just using names as generic example. But what's going to happen is the consumer, based on their desire and how they were serviced at the carrier level, at a consumer level, is going to be able to make that decision. In the history, we've only been able to choose our employer benefits. We might even choose an employer based on those benefits. They may change in the next year. So we have no control over that decision right now. And in ICHRA, we do. So that is something that's really important, that legislation allowed employers to adopt this, allow it to still be pre-tax, or allow those FICA deferrals for the employee. And that's a key legislative change that's going to help adoption.
Yeah. It's so fascinating thinking about what that does from the consumer standpoint and that relationship, and also from the business standpoint, and how really that whole relationship with the plans, with the providers, and being a little bit more kind of consumer focused. It's so fascinating thinking about how that changes that relationship.
And that opens the door for technology, because at the carrier level, they've invested all of their technology dollars on the group side to facilitate group more efficiently, to give group service, to give group a binding coverage day of, and being able to confirm things. On the individual side, they didn't spend a lot of time because they didn't want those individual one-off policies that came purchased by a family down the street. They wanted what they considered healthy populations that come from employers. And they considered individuals going out to find a plan at possible unhealthy risk. We're changing that narrative, because we're saying now these employers are allowing individuals to choose, and they're enrolling in your individual policies. How are you going to provide them customer service? How are you going to provide us customer service as benefit-based as we're enrolling volumes of people? And how are we going to solve for these challenges you have on one side of your business where the technology may be a bit legacy?
Yeah. And how have the recent changes in technology really allowed a company like yours to flourish? Obviously, legislatively, having that ICHRA kind of be passed where people can actually provide their employees with those types of plans, and it expands. But in technologically, what has really kind of scaled this or accelerated the adoption of plans like this and of that particular piece of legislation?
Yeah, I think we've always seen startups be successful behind a government regulation or compliance legislation that's difficult to facilitate. Technology has to solve that for the people who are within whatever ecosystem that is, where there's a regulatory change. Benefitbay is obviously going to benefit from that ICHRA legislation. The other thing is that technology in this space is needed because in benefits in general, it's very legacy. You have to make a change. You don't have a confirmation of the change. The billing doesn't update for the employer for two weeks. Everything's so slow. And maybe you've enrolled in your benefits, but you go to the dentist and it's not working yet because they haven't keyed in manually back here your enrollment, right? So it's ripe for a lot of improvements. But at the end of the day, the employers have been saying, why can't we fix this? Why can't this be easier? Why do I have to have Susie and Johnny and Tom in my office saying they tried to go to the doctor and their coverage is invalidated? So there are so many things aside from ICHRA that are ripe for improvement in the carrier space, in the insurance space. It's one of the more legacy platforms that are out there, or the more legacy processes that are out there. A lot of the bin admin techs that are out there have been out there since the 1990s, early 2000s. There needs to be more integrations. There needs to be more lifetime, real-time integrations. If we think about 401k and how far that's came from pensions to defined contribution for 401ks for employers and allowing employees to make their decisions. Originally, you had paper forms. Someone came out and educated you on which plans to pick. You picked your plans. You turned in your form. Eventually, it showed up on payroll. Then eventually, your funds showed up in your Fidelity. But now all of that's real time. You can go into any of your payroll systems, change your contribution. You can set various types of contribution schedules. You can ask answer some questions about how you want to retire. It can help you through AI drive your decision. That's where we need to be for healthcare. We have the information. We have the claims data. We have everything we need to help a consumer make the right decision for themselves. But we just don't have that available for the consumer to make the decision. And so this is going to allow the consumer to make those decisions based on their family, keep their employer out of making those decisions for them, keep employers out of the health insurance business, and allow the employees to make the decision. Also allows the employers to budget. But the big thing for us is that we wanted to protect the ecosystem. We do think the broker has a key piece in this space. They do a lot of the consulting for the employer on other areas, whether it be HR, whether it be complex ERISA concerns, whatever that looks like. And so the broker has a space here. We don't go direct to the employer. We are here to help facilitate with the broker, decide what's best for their employer. ICHRA is not always a fit. If a population exists in various states that are more expensive for that said employer, ICHRA may not be the right solve. So we're not here to just go out and sell that to everyone. We want the best plans for the end consumer at the most positive rate for the employer and the employee. So that's where we're here to help make that decision quickly. We have a tool in the front end that sets us apart, and we call it the Fulcrum tool. It's really that tipping point of where is ICHRA a fit? Where is it not a fit? Where's the go, no go decision happen? And allow that to be a speed to market decision and evaluation rather than let's go to a spreadsheet, decide if this population works for this, and then get it back to you 2 weeks later. They can do that live in front of their clients and discuss, well, I want to do this or I want to do that.
So you work directly with brokers who have relationships with companies, and that's so brilliant because for them, it really enables them to achieve that outcome with their employer. They have such an intimate relationship versus trying to build it from scratch. Was that kind of how the genesis of the product came, or was that along the way as you were starting to build and test it out? Brilliant. It's brilliant because it's almost like an automated acquisition if it goes well.
Yes. Yeah. Right. Or it's a sales arm as well. So part of the problems with the startup is really having all that marketing and sales opportunity to really go and hammer this story to new people, build their trust, have them cut off someone else who had their trust, get them to trust in new technology to facilitate something that's completely new to the market. We didn't feel that was the best adoptable process for us, although there's probably more revenue. You go direct to the employer and you cut out the broker. We feel the broker has value in this system and in this ecosystem. We also feel ICHRA is not a solve for everyone, and we want to make sure that the employers and the employees get the right program that's right for them where they're seated and located. With distributed teams, that's a evaluation that has to be done based on the age of the population, the zip codes they're located in, the plans that are offered, the pricing of those plans that are offered, and compare it to their current offering. So that is a technology suite that we offer as a SaaS platform to brokers. That's where our SaaS product starts. Then those employer clients of that broker become our employer clients, and those individual employees are our clients as well. So we are really facilitating their benefits on behalf of them. We have a large payment backend facilitation for these premiums to ensure there's no hiccup or hangups with coverage when you're dealing with an individual coverage basis. We have real-time banking technology. We ingest those banking data transactions every single hour. And so that really, all of those pieces of us taking out the pain of change, right?
Yeah.
No one likes to change. So we need it to behave just like group, but allow them to make the decision. We need them to be able to make this decision easily, not feel overwhelmed. Some of these states have 66 plans available. If you show one employee 66 plans, they're going to get overwhelmed. You've got to help lead them to the decision through what types of doctors do you go to? What types of health concerns do you have? What types of scripts do you take? Start to eliminate those plans choices down to the ones that matter to them, and then help them facilitate and make a decision based on a per paycheck cost and a plan comparison. So I love that our technology does that. It helps us stand apart from a lot of the others. Some are just showing a few plans. Again, that's not allowing them to make the decision at overall what's available to them, right?
Yeah, exactly. Speaking about the traction of the company, what's been exciting not only up to this point, what's particularly exciting about how many companies you've been able to actually get onto these plans, actually benefit their employees and see a big mass adoption towards this direction? What's been exciting up to this point, and in particular, what are you excited about until the next month?
Yeah, I'm really proud that we opened our doors April 5th, 2021, and we were able to onboard and turn on our tech. We turned on our tech August 1st, so just 4 months in. And then we were able to onboard our first employees in September, a small 9-life group, right? Learn how to work out the kinks, and then move on to January 1, 2022 with just a small group of employers of 80 employers, small group of lives at just around 1,200. That put our average employee life group at around 20 at that time. We've significantly moved that needle year over year to an average employer life group that's over 80. And so as we continue to look at those larger and larger groups, we're able to move the needle significantly farther, quicker.
Yeah.
But also the other thing that's exciting to me, when I joined here, I really never felt that we would play in the larger organization space, right? I thought that really the SMB market or the under 50 or the 100 to 300 would be the maximum place where ICHRA would be a facilitation that an employer was looking at or a broker was looking at. We have an 1,000 life group, 1,000 lives, right?
Wow.
That was the first time we had seen something to that level of numbers. We'd seen several 350s, a 550, something like that, but we hadn't seen that level of size group. Now we are looking at a 1,700 life group that would come over from a competitor. And to us, that is just amazing that a 1,700 life group has been with ICHRA for 2 full years, that they're looking to stay with ICHRA, but maybe improve that technological offering, right? That's also positive, right? So they're looking to improve that experience. For me, those are the most exciting things for seeing that this is not limited to that smaller business, that this is going to be something that a lot of employers are willing to look at because they want to allow their employees the opportunity to choose.
Yeah. And I think you mentioned it earlier. It's like, it could even become a reason why a lot of employees actually go to companies. It's really becoming it's interesting, the employee-employer market, because there's so much agency for a lot of these employees who are looking for companies with the right benefits. And on the other side, companies looking for the right individuals to grow on their teams. It's like team is so important, company and so important, and having that match is challenging. And I'm sure there's so many variables to consider in that kind of engagement. But what's been so necessary for going upstream into those companies? Was it an increasingly doubling investment in technology? Where did you shift the business to be able to actually service such a larger amount of customers? Because I'm sure it comes with a lot of problems, right? More data, more information, more onboarding, more variables, all the stuff.
Right. It comes with a better long-term customer value, but that's something that speaks to the investor and not to an actual pain point of solving those problems. For us, really moving that needle forward was looking at where are the opportunities and how do we facilitate with our brokers. So once we had those broker clients on board, they started to look at their populations of employers, and they started to think of cases and scenarios where their employers were paying a lot or their group program had gotten expensive for whatever reason. And so they started to evaluate within our tool set, what would ICHRA do for this employer population? And they started bringing us those larger groups. And so that's really how we went upstream. And then the 1,000 Life group, I mean, that is really an HR person looking to be ahead of transformational change and be a leader in this adoption and say, I want my employees to choose. Perhaps a self-funded plan would have been maybe 5% cheaper, but that 5% is not worth our employees being able to choose, right? So we're going to see varying decisions being made of saying, I actually believe in my employees being able to make their healthcare decisions. And so although maybe for the organization, it's a 5% swing, I'm going to choose ICHRA because I want my employees to be able to make this decision for themselves. And then once they enroll, that swing may be, actually, they may have saved going to ICHRA because each one of those employees are going to make a decision that's based on their family. Sometimes they do choose a lesser plan and it doesn't cost the employer as much money. Sometimes they choose a more expensive plan that costs them more out of pocket, which saves their employer more FICA salary deferrals. So there are all these complex reasons why ICHRA is a fit or isn't a fit within an employer population. And that's why the technology is so important. And the speed to make the decision on whether it is a fit or not a fit for an employer. Because we 100% want to be able to identify populations of employees that may be seated in an area that don't have a great ICHRA offering or a compliant plan in a zip code that's going to be competitive or seen as a great benefit for their employees. So we want to be able to address those things right away out of the gate and have those conversations so that we don't create a bad story for ICHRA in the marketplace.
Yeah. Thinking about it, whether it's external or internal, what are some of the biggest risks that your company faces today?
Our biggest risk is really investment in this space. So there's a lot of investment in this space right now, some large seed rounds coming out of $11.5, $12 million that are just launching, right? We have a couple of years on them, which is great. But we have at this point raised $7.3 million over this time period, right? So we've grown a little slower. We haven't dumped as much money marketing and sales in the marketplace, right? And so having that brand recognition without those large capital influxes, really being able to keep up with the speed of technology without those large capital influxes. So that's a big risk for an organization. We have grown slow, but we have grown strategic, and we have grown in a way that we can maintain service and brand and continue to serve those brokers that came on with us and took a risk in the beginning successfully while we're adding and growing on with our business. I think that that's something I'm proud of. It's just also it can be a risk when you're in a fast moving technology space, right? It sometimes feels like the person with the most money wins. But at this point, we're on great pace to raise a significant A in first quarter 2024 because we continue to just show year over year, we're just crushing it on the numbers. The other pieces, I will say, our team is top notch. I mean, we have the expertise and the passion for this space that really shines when we're on the calls or when we're with our clients or when we're solving those complex problems or when we're doing open enrollment, which we've all have to deal with. Everyone enrolls at the same time. It's such an influx of people on the same number of people within every organization. So all of those pain points, I just think that our team stands out. With that always comes risk, right? Our team is probably highly sought after and we'll start to receive phone calls from a lot of the competitors. And that's something I always want to continue to make sure that our team is happy and feels valued and rewarded in this space, and that they know that we're building this together and that we're all in this to continue to grow together. So far, turnover has not been a problem, but no, that is just always something that, I mean, it keeps me up at night as a CEO. We have some really great talents and we want to make sure that they're just as happy as we are with them.
If everything goes well, what's the long-term vision for the company?
Long-term vision is to become an end-to-end benefit-bay platform, really the benefit platform for this space. I mean, there is really a desire to be an embedded ICHRA platform within some of the other employee systems that are out there, so that if an employer is a large employer and they have to deploy some type of group product within their traditional Ben admin system, they can also deploy the ICHRA experience for benefit bay all within one system. to their employees. It's really important for me that the end user employee's experience is not harmed by offering an ICHRA, right? So having an employee have to log in to one system over here and another system over here to do this, I do not want that to happen. So end-to-end when I say end-to-end, I want to make sure that we can facilitate everything they need to facilitate for their family. So regardless of the type of benefits coverage or HSA card or FSA card, whatever that looks like, that we're able to deploy that end-to-end. We're not there yet. We're currently mostly a medical provider, right? Just living in that ICHRA space and specializing there, and then offering the basic ancillary products within app. But we want to get to the place where they can facilitate everything they need to facilitate within their employer benefits program within our system, right? That we're integrated with all of the other technology platforms. We're integrated with all of the payroll systems. We're currently undergoing a project with Finch. Finch is a large startup that had just raised a Series V, but they are doing all of our integrations for the payroll side of the business. And that's going to put us one step ahead of the competition. So
love it. I love that. And I love this next section. I call it my Founer FAQ. So I'm going to hit you with some rapid fire questions and we'll see what we get. Okay, cool. Yeah. First question I always like to open it up with is what's particularly hard about your job day to day?
I think the emotional highs and lows. And that's from a CEO seat. There's lots of yeses, there's lots of nos, there's lots of wins, there's lots of losses. So that is something that, especially when you're raising capital, I'm not doing that currently, but when I was, there's a lot of no's. There's a lot of slow no's. You get excited and then it's a slow no. When you're dealing with customers, brokers, and insurance in general, there can be anything, right? And we answer the phone. Everyone has my cell phone number. It doesn't matter if it's an employer client, a broker client. And so it just depends on the day. We don't know what's going to hit us. So I think the emotional highs and lows of that, sometimes you might think you're going to have a fantastic day and then maybe something hits you. And then some days you think, okay, I've got a jam-packed meetings. I've got all of these things happening, but then you get a big win and you're just so excited.
I love that. I always like to think in terms of how your company actually might affect other things and other industries. And what do you see, or is there any exciting change in terms of medical offerings and how that's maybe shifting, whether it's just basic medical health plans or what's getting incorporated? Are you seeing any, offerings that just weren't existent in the past?
Yeah, I think we're seeing more and more transparency in healthcare purchases. And I think that's due to legislation, due to regulations and upcoming legislation coming. So in the past, there were a lot of hidden fees within healthcare that just really weren't known, or back-end commissions or incentives that go to different parties within the system. In the transparency of pricing, we can actually help that employer and employee see where those dollars are going and who they belong to and what part isn't healthcare. So from that perspective, I'm excited about that. I think the plans that are being offered, I think they're more and more competitive. I think having multiple carriers be able to win this business. Historically, an Oscar, Ambetter, Harvard Pilgrim, one of these carriers that are geographically located in a certain area wouldn't win over a flagship brand. They wouldn't in a group space. The employer is going to pick the flagship brand over the lower name brand because they want to keep their employees happy. Yeah. What we're seeing is the employees will actually pick one of those smaller plans because of the cost, and it may have better coverage for the things that matter to them. So they're able to win that business, which is going to help us have competition amongst the carriers and drive pricing down. What has not allowed pricing to get driven down is because there's been a lack of, there's been the same 3 or 4 carriers that are buying business from each other year after year and shifting us all around, right? So this is going to allow a little bit of stabilization in the market. It's going to create a data challenge because now we have individual plans, and a lot of the technologies that are out there that are evaluating health consumer activity, they're getting that data from the group plans. So now it's going to say, okay, individuals are going to have to give their rights away to share all of that data. And it's going to be harder and harder to collect that data on what are individuals doing with their healthcare decisions. And then what are those plans doing?
Yeah. It'll be interesting to see also how you mentioned it earlier in the show, but the connection between the provider and not even the provider, the healthcare provider, the doctor, practitioner, with the consumer at that point, because it's so directly correlated now with their ability to choose. And I think that's a good idea. I think that's a good thing for things for be productive in that direction, get closer and more intimate, and even
Yeah.
challenge it in a lot of ways.
Right. It is what we can start to hear from our care providers too. They can start to tell us, actually, please don't do business with XYZ carrier because they mark down the bill and they don't pay us for 120 days and all of these things. And so we
Wow.
can start to drive some of those positive behaviors to turn the cycle around in healthcare. I know I'm passionate about this. I have a daughter who's a third year resident and has taken on a lot of medical school debt. And to become a doctor in the United States it's a very lengthy and taxing
Yeah.
process. It's very expensive. Once you get out, now the rates they can earn versus the liability insurance they carry and all of the things, it's
Yeah.
actually going to be hard to really motivate people to become doctors in our society, right? And so we have to get to a place where we value our medical professionals, we value what we choose, and that those carriers are offering the service that they're being paid for, and that the medical providers can help us make those decisions as well.
Yeah. Yeah. What's something that you're good at now as a founder or CEO, but you wish you were better at earlier on? Anything come to mind?
I think the storytelling in the
Yeah.
beginning, I'm an accountant, so I'm very conservative in talking about objectives and what we're going to do. I never want to overestimate. I always want to overdeliver and
Yeah.
underestimate. I think I was slow to learn that in the venture capital world, they're going to discount anything you say as a founder because usually there's a bit more grandiosity of
Yeah.
those goals. And so when I come in conservative, then they knock me down a little bit based on what
Yeah.
typically founders will do. Then sometimes it's seen as, well, this is really probably not going to be enough adoption for us. And I'll look at my numbers and think, well, how did they get there? Well,
Yeah.
and so learning from the mentors that have mentored me and said, look, they're going to discount what you say by 20 to 40% because that's normally how far founders overshoot of what they're going to
Yeah.
hit. And so I had to get to a place where I could tell that story more confidently about what we could do and stretch myself on what those goals look like. And then I think really learning when to cut my losses or to step away from conversations that aren't looking fruitful. I've invested a lot of time and energy into the slow no's or the slow no partnerships or those really draining one-sided relationship conversations. And
Yeah.
I've learned, you know what, Benefit Bay has a fantastic product and we do not need to do that. So
Yeah.
we will continue to partner with great partners going forward, and we won't waste our time on those types of behaviors just thinking we want a seat at the table. We want to be at the right table.
Yeah. Well, I mean, personally, I think the strategy is so impressive. Thinking about the vehicle of brokers, servicing them and really enabling them to accomplish the other parts. Because otherwise, then you're almost trying to replace them, incorporating all these other bits of technology, regulation, compliance.
Right.
It becomes like a
Right.
whole other product at that point.
Right. And we want to
Yeah.
partner with brokers who are utilizing the technology to do what's right by the employer and the employees, right? Who are motivated to continue to bring the right consultative approach towards their employers each year. And that's what we've seen as well that I should have learned a bit earlier is that there are going to be brokers who are going to sign up because they have one problem group that asked for ICHRA and they really don't have a value in the space. They don't believe in its long-term adoption. They're not going to take the technology to look at where it can facilitate and support their employer client group. There are going to be brokers, which we have seen and had success with, that are going to say, oh my goodness, let's evaluate our entire book of business and let's see where this is a solve. And they present it to their employer clients. So when we invest
Yeah.
a lot of time in educating our brokers, teaching them how to use our technology, all of that front end expense, we have a very low price for our software. And so that is not a winning strategy for us. But it took us a minute to learn that. We had to make sure that who we're partnering with is worth that initial front investment because that's going to be a long-term relationship.
Yeah, so smart, so smart.
Mhm.
And I always like to ask this question because I love how founders extract knowledge out of anything that they ingest, whether it's early in your career now. What books or people have had a lasting impact even today?
When I was on the founding team of Benefit Bay, I originally came on as the VP of operations. Somebody who has a lasting impact on me is no longer with us, but he was our board member, Arvind Rohan. And he had been a long time early executive of LinkedIn and then had moved on to Cricket Health and was the original founder, CEO, and then chairman. So he really helped me to understand that I had the skill set to be a CEO that I had the skill set to be successful in this role, but also how to handle the ebbs and flows and challenges that come with it. Next is really, we have a current board member who was also a founder, and he just checks in to see how I'm doing. His name's Kelly Halpin, but he just checks in to see how I'm doing as a human, right? And so much of that is lost in when you're in the CEO seat, you cannot lean on your employees. You cannot let your executive team know that you're having a rough day. You cannot let the team see that you're feeling a little concerned. You can't let any of that out. And so having those people who you could go to and have a conversation and they're not going to get concerned about, they know that you're just having a day. It takes a lot of grit to be a founder. It takes a lot of grit to be a CEO. It takes a lot of grit to continue to hit the ground running every single day in a tough world. I think right now is a really tough economic environment to be leading a startup. It's a really tough economic environment to be raising. We get a lot of push from investors on things that wouldn't have been a push in the past. Multipliers were crazy in the past. People didn't care about margins. They didn't even care if you had any revenue, and they were giving you large valuation. We have revenue, and we will get nitpicked on margins or something like that, or anything that moves the needle. And I think that it's just a different environment to be in right now. So I think having those people that you can go to when you're just having a day. I mean, we're all entitled to have a day. We're entitled to have a bad day. We're entitled to have great days. But to have somebody to be that sounding board to talk to, or that you know is going to be there to listen and really challenge you, I think that's just impeccable. We have an investor that came in when we were in some troubled waters, and Scott Shane is on our board, but he is with Comeback Capital. And Comeback Capital has really been benefit-based comeback story. And I think if I had one pivotal moment for me in Benefit Bay, it was securing Comeback Capital's term sheet. It is the first term sheet I secured as a founder CEO, and it was in troubled waters. And a lot of the slow nose I was getting is, well, you're a first-time CEO. We're not sure. We want to see you prove yourself before we'll give you a term sheet. So they might have invested a long time in diligence, took a lot of my time in investment, and then gave me that answer from their committee decision. And so securing Scott's term sheet, but then also Scott being a professor of economics, he is somebody who will challenge you more like a professor would challenge you and help to get the best out of me, but he's still going to be the person that's there in my corner. I was on the way to a national volleyball tournament last year, closing a round, and Scott helped me get my DocuSigns out, right? I mean, he's just that kind of support, knowing that we're going to be successful. And he has helped make some intros that have been just so fruitful. And I think that those types of things, they're just invaluable. And you learn that there are still people out there who are willing to invest their time to help you step your career up to the next level. And just because they met you and they saw something in you and they're willing to do it. And it's not because they knew you 20 years ago or any of those things. So that's been really something that's made a difference for me, is just having a support system that's not your employees, because you need those other support people. They're challenging in the same respect. So I really respect that, because they're not easy sometimes, and they definitely push me to where I need to be. And it's just, we all need those people in our lives. And that's how we grow.
Brandy, it's been such a pleasure chatting with you, and not only walking through your journey, but also through BenefitBay and where the company is going, what you're working on. I always like to make sure that we didn't leave anything on the table. So last little bit, before we talk about your LinkedIn, your plugs, and where to find you, is there any question I didn't ask you that I should have?
Well, I would like to say who I am as a person outside of Benefit Bay, and I have 6 daughters. That's something that surprises people. I would like to tell women out there that are climbing the corporate ladder and doing the thing, you can get there, and you will get there. And sometimes the most unorthodox routes will get you there. So.
Yeah, it's incredible. I'm one of 6, and I can't imagine. But I have a blended family, so we're split up. But still, it's a lot. It's a lot of resources, a lot of energy, and it really deterred me from having kids. No, I'm just kidding.
No. I don't want to hear that.
No, it's a great experience, and I don't think a lot of people get the collaboration that comes with big families, and it's translatable into how you, with employees and with people you have a relationship with often to see. So last little bit, Brandy, where can we find you? Where can we be a supporter, a fan? Give us your LinkedIn, your Twitters. Where can we be a part of your team?
100%. So I would love for everyone to follow benefitbay, or like I said, we don't spend those marketing dollars. So get out there, follow benefitbay, share our story. I'm on LinkedIn, Brandy Burch. I'm out on LinkedIn. You should be able to find me through benefitbay or just looking on LinkedIn for myself. I do have a Twitter, but it's not really, I don't tweet for the business. So it's not too exciting. I was on a recent Midpoint podcast, pretty proud of that one as well. Really just, I'm newly out there, as I've always been an accountant, and we don't really get out in front of the lines. So this is stretching that skill set for me, but thank you for the time and thank you for taking the time to talk about ICHRA. I'm really passionate about it and hopeful to follow up with you again later.
Amazing, Brandy. Thank you so much for being on the show today.
Thank you.